The proxy season, Institutional Shareholder Services is now predicting three key trends when it comes to voting policy choices: board accountability, ESG, and artificial intelligence shareholder proposals. Joining us right now is ISS Global Head of Investment Stewardship, Lorraine Kelly. Good morning to you.
Thank you for having me.
It's great to have you. I don't know if the public understands how much influence you have over corporate America in so many ways, given how you what your recommendations are around board governance and the like, but it is vast and it is big. Let's talk about ESG, because that has been sort of the canary in the coal mine. It's the topic du jour all the time, and you are shifting, or I don't know shifting, but offering a new product of sorts.
So let me first start by saying thank you for being here, but the comment on influence, we don't believe that we have the influence. It's really about institutional investors. So our business model is that we offer research and recommendations through the lens of a voting policy, and investors make those vote decisions. Happy to chat about ESG.
We can talk about your influence in a moment, but let's just talk about the ESG piece of it, because that seems to be the news right now.
Absolutely. So what I wanted to comment on is that we offer voting choice. We've offered multiple voting policies. We always have. What you read about in the newspaper is our benchmark or our house view, but we offer other policies as well, such as Catholic values, sustainability, global board aligned. In keeping with that theme, we've determined we are going to offer a policy from a company called Boyer Research, which is self-described as ESG skeptical, because we believe that that meets a need of the marketplace.
So what does that mean in practice?
What does the policy mean in practice?
What does the policy mean in practice? So pretend I'm an institutional investor, I subscribe to your services, and I get the ESG skeptic recommendation. And does everybody get this recommendation, or just those who pay for it?
Right. So again, if an investor chooses to use ISS, they will select a policy that meets their needs. In this particular case, it is a Boyer Research policy, so it's actually not an ISS product, Andrew, but it is a policy that we will implement on their behalf. What does that mean for them? I think Boyer Research would be best to describe their own policy, but they are really not supporting the majority of the ESG proposals that are going to be on the ballot this year. So they're going to support maybe 5%. In comparison, the ISS benchmark or house view, which is pretty centrist, supports about 50%.
How much of this is about the investment thesis, the actual underlying investment thesis of what's going to actually get you to a better return long term versus something else? And how do you think about that in the context of this new product?
So the investment thesis is something we leave to the investors, frankly. And when we work with the investors, they help articulate what their philosophies and their programs are.
But can I interject just for 1 second? And this goes to, at the top, you said, oh, we don't have this influence. I would make an argument, and you can disagree with this argument, that and I actually think it's unfortunate, but it's the truth, and I understand how the world works, that a lot of institutional investors effectively outsource their investment philosophies on governance to you. That's why they're hiring you. And a lot of folks get the ISS recommendation, and they're able to then turn around to their investors and say, well, and to their pensioners and everybody else, say, well, we did what ISS did, and that's actually an easier way for us, rather than us have thousands of people who are going to work for us, who are going to actually look at every single stock and every single company and figure out the governance and all. We're not going to do that. There's this other company over here called ISS. That's what they do, and we're going to let them tell us what to do, and that's how we're going to run things. I don't know if you think that's a fair explanation, but I think that's what's happening, and that's why I think you have the influence you do, even if you don't want to believe it.
I don't think that's what's happening. I think we enable investors, and so investors will come to us. Again, it's not one view that we're offering. It's a multitude of views, and they're going to pick that policy. In fact, the majority of large investors come to us and we implement their house views, their custom policies. So they've established their views and their perspectives. We then provide a research report that collates all the data, takes them through a framework, and gives them that recommendation.
10 years from now, if we go back and look at stock performance on these ESG companies with ESG proposals and companies without, What do you think we're going to see?
Well, that's an interesting comment, because on the ESG proposals and the ESG shareholder proposals this year, and we've seen record numbers of them in terms of the volume, but we are seeing less investor support. So there is a disconnect there. They're not happening.
No,
I don't. It's at 16% as of last year.
And what do you think the distinction is between U.S. investors and European investors? Because one of the things that you used to hear from Larry Fink all the time was one of the reasons that they were offering also sorts of different ESG products and the like was this idea that they were getting pushed from, frankly, European investors originally to think of this way.
I think there is definitely, if you speak broadly, more of an ESG mindset in Europe. And I think that the US tends to be more about financial materiality on these factors.
Right.
There are certainly areas within the US that are very pro-ESG as well.